Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a look at the market for Thursday, June 29th. What do we got on tap for today, Ken?
Well, Ali, the Dow Jones Industrial Average had a good day. Financial stocks on fire. Goldman Sachs and JP Morgan leading the Dow, but I also want to take a look at Visa in the Dow, which made a nice move today. In large cap technology land, I want to take a look at Adobe, ADBE, and finally in the oil and gas space, Tidewater, TDW.
All right, a diverse group of stocks there. We will check those out first. Let's take a look at the major indexes today, starting with a look at the Nasdaq Composite, which it looks like finished essentially flat on the day. A super quiet day of trade here, Ken, just fractionally lower for the Nasdaq. But on the upside, small caps led today with the Russell 2000 up 1.2%. We also had the Dow up 0.8% today and the S&P 500 up 0.5%. Is it safe to say that the pullback is over here, Ken? Your thoughts on what we're seeing out there?
Well, I'm not sure. We do have that big piece of economic data tomorrow, personal income and spending, and we'll get that personal consumption expenditures index tomorrow morning. So, we've been waiting for the market to get spooked by, high inflation, and it just seems to come and go without much fanfare. So could be the same tomorrow, or it could be different. So we'll be watching that piece of economic data pretty closely. I think the market, especially the Nasdaq, had reason to sell off today. I mean, with that big spike in the 10-year Treasury yield, I was just checking that, still up about 13 basis points right now to 3.84%. So you can see a notable move for that 10-year yield. We had better than expected final Q1 GDP data that came in at 2%. That was well above, I think, the 1.3, 1.4% consensus. And then jobless claims were expected to rise a little bit. And remember, the Fed wants to see some rising claims to help it fight inflation, but they fell much more than expected. So you had this money flowing out of bonds and fueling this big rise in the 10-year Treasury yield. And not that long ago, the Nasdaq would have sold off with interest rates spiking this much. But I think the index is still telling us that it's it's in a confirmed uptrend, and it is still acting very strong with nice participation from a lot of different stocks.
Yeah, that's right. And taking a look at 0TNX here on MarketSmith, which tracks the 10-year Treasury yield, it looks like we did have a breakout of a shorter term area that we saw some tightening. And now we're getting pretty close to a declining tops trend line that has the peaks connected from last October and earlier this spring. Do you think that would spook the markets if we continue to see this fast ascent in the 10-year? Or
Yeah, I think so. I think so. And I think you're right in saying that the 10-year yield did cross some key technical levels today. I mean, you look back and it was back in like the first half of April when it gapped down close to that 50-day moving average. But the 10-year yield up around 386, 387 today. You have to go back to February earlier this year to see it that high. So I have a hard time believing that if interest rates continue to spike, that the market is going to like that. I think the market may be getting a little more comfortable with the fact that, the Fed is probably going to hike interest rates by another quarter point at the end of July. They're going to skip August, and then in September, the likelihood is starting to increase that we could see another rate hike there. So the fact that the market isn't selling off on this scenario is a good sign for now. But I think we still want to keep watching this 10-year yield, because if it just keeps moving higher and higher and approaches that 4% level, that could provide some pressure for the stock market.
it could. Let's take a look at the S&P 500 with a gain today, putting it awfully close to that 4,400 mark. And if you go back a couple of sessions, we saw the S&P find support above its highs from last August, which also coincides with above the 21-day line. So a question that I have, Ken, and it'll be interesting to see how this unfolds. We can't predict what will happen, but one would have thought that with the strong gains that we saw that preceded this pullback, that maybe we would need a little bit more of a pullback. But if we're not going to get that from high to low, maybe in time, maybe we just need to put in a little bit more time here. But the shorter the pullback is, it seems like the stronger the signals we're getting from this market.
Yeah, it's we have to also remember if you check the Stock Traders Almanac, you find that the month of July is actually a pretty good month historically for the stock market. I don't remember the specific data that I saw, but July tends to be a good month in the stock market. So we have that to look forward to. We've got second quarter earnings season that is right around the corner, but I think we just need to concentrate on the market's message each day. Again, spiking interest rates, that's typically not a good recipe for, for tech stocks. Now, below the surface today, when you look in the IBD 50 and some of our popular growth screens, I mean, there was some selling in the software. Enterprise software stocks, for example, you don't really see it too much in the IGV, but saw Cloudflare NET was down sharply today. Some of these did not really fall in heavy volume, but so definitely some selling in the software sector and also home builders and maybe some select chip stocks. But overall, Nasdaq held up well, and yeah, even the home builders, that ETF really hardly not showing any problems at all here. So we'll have to see. We have to respect the index's technical health here, and just seems to be a good market environment here right now.
Yep, definitely seems like the overarching signals that we're getting as active growth investors. Let's also take a quick look at the Dow. Here's at DIA with a solid day, putting the index back above 34,000.
Yeah, I mentioned Goldman Sachs and JP Morgan. Not a whole lot of healthy charts in the financial sector, but do like the look at JP Morgan here. We're going to hear from them not next week, but the following week. And JP Morgan is rising near the top. Good volume in there today, closed near highs. So, boy, if the financial stocks start breaking out, you'd have to think that would be good news for stock market bulls as
Right.
well. But Dow Jones made a good move today. JP Morgan, Goldman, and Visa, we're going to talk about. Those were the three big gainers in the blue chip index.
Yeah, I agree with you on financials, even if those aren't the stocks that we're buying, because we have been talking about other areas that have more leadership qualities to them, more of those more traditional growth areas, but also outside of that, industrial related stocks have been looking quite interesting this week from a relative strength perspective. But it's good for the overall market. We want to see everything swimming in the right direction. So if financials start participating in a more pronounced way, then yeah, that seems like that's good for the market. So
No
take it.
question about it. And the 23 banks, this news came out late yesterday that the Fed's annual stress test, they put the banks through these certain scenarios and how would they hold up financially if there was a sharp slowdown in the economy and a run on deposits and these types of things, but they all passed with flying colors, which they've been doing in recent years. But that was the fuel for the financial rally today. And XLF, which JP Morgan is a big weighting here, had a good move today. But you can see that 200-day moving average is still a potential resistance level to watch. It got turned away there not too long ago.
Right. Yeah, this is a lagging sector. Clear to see that on the chart. We're focused on the areas of strength, but we want to see more participation. So if that extends to the financial stocks, that's great. And now let's take a look at this is Visa, Ken.
Yeah, Visa made a small acquisition. They paid about $1 billion for a Brazil cloud-based banking platform. Again, the name is Pismo, and they paid $1 billion for it. So a fairly small acquisition as far as Visa is concerned, but getting them into Latin America, and I think that's a big reason why the stock was moving today. Volume, it's been kind of moving higher in light volume. You did have volume pick up the pace a little bit today, came to about average, but good to see the blue chips participating here. Visa, much closer to highs than Mastercard is at this point. So maybe Visa might bide some time here below its recent high, but yeah, Mastercard's still looking good here. So maybe after this big move today, you'll see just a little sideways movement below those recent highs around 236 or so, and maybe get an entry. But I thought today was a buy signal for those that felt comfortable buying and had money to put to work.
Yeah, and Visa was today's stock of the day, so we definitely encourage folks to check out that article on the homepage of investors.com. You can find that. Let's also take a look at Adobe in the software sector, which has been a big area of focus for us. And Adobe creating developments in artificial intelligence related offerings. So that has helped fuel the stock in recent weeks. And it's really impressive to see how it's been quieting down with the volume trailing off and just some really nice tight action here for Adobe.
Yeah, which is why we're going to take a look at the stock right now. So you can see all the heavy volume when the stock broke out over that 400 level. That was actually before earnings, so it had moved quite a bit headed into its earnings. So it wasn't surprising to see when the stock raced over the 500 level after it reported earnings. It gave back some of those gains, but it had been such a tremendous move for Adobe. On the weekly chart here, I like to just keep track of technical setups like this. Clearly a stock that's under accumulation here, several up weeks in a row. And when I see, one down week and another down week taking shape this week where, the stock is not giving up any ground, you just want to pay attention to charts like this. We know that large cap technology was really the only pocket of leadership in the market for a while. But, and you hear, Microsoft and Apple and Meta, but I put Adobe right up there with some of these other tech giants. You mentioned the artificial intelligence angle. They've got a great CEO that's been with the company all the way, since 1998. His name is hard to pronounce, Shantanu Narayan, but he's been there, started in 1998 and took over the CEO role in 2007. So it's been there a long time, and I think this one still has the potential to be a leader.
Mm-hmm. Let's see if it can get above that 500 level. It seems like that's the next magnet for the stock as it tightens up here bullishly. And last but not least, let's go to TDW, Ken, showing strength today, up over 5% in above average volume. This has been a standout in the sector as it holds up and consolidates, even as prices of the underlying commodity here at question have it's been looking pretty weak. But does that mean that TDW can outperform? Are we going to see rotation or at least, pockets of leadership in oil and gas in 2023 when a lot of the focus has been on software and chips and
Yeah,
technology?
it's possible, and what oil and gas stocks are. The problem in this sector right now is that you have the U.S. economy that's slowing down. You've got China's economy that is slowing down. So that is you look at some of these oil ETFs that you have up right now. Really, that's not an environment where you expect, rising demand to fuel higher oil prices. So with Tidewater, you can see its industry group, it ranks all the way down near the bottom of our industry group rankings. That's not surprising. So in a sense, this is a lone wolf in the group. But what we've talked about on IBD Live here is just there's a very compelling fundamental picture at Tidewater. You can see the huge annual earnings estimates, and you just look at the growth in recent quarters as well. So for an oil and gas stock selling at 75 times trailing earnings, I mean, yeah, sure, that gets a huge multiple, but you can see that there's a pretty compelling growth story here. So it's been having problems getting over that 51 level, but if we can get a good volume spike, we're in a confirmed uptrend. We're in an environment right now where technical breakouts can make headway. So this is just a good one to watch to see if it can break out with conviction over that 51 level, and it kind of setting up like it wants to do that.
Yeah, and arguably actionable today as it clears not only a declining tops trend line if you draw it a little tighter, but also tight action over the last couple of days here as well. So we'll have to see if it can break out above that left side high next. All right, everyone, that is it for today. Thanks so much for tuning in. Make sure you join us tomorrow morning on IBD Live, where we are welcoming back Mike Webster to the show, former portfolio manager underneath, what am I trying to say? Billy O'Neill, IBD founder. He worked very closely with IBD founder Bill O'Neill for many, many years. And he also served as IBD's head market strategist. So it'll be great to get his thoughts. And we have a lot of educational topics we want to cover, but he's our most requested guest, and he's going to be making his return to the show tomorrow. So we hope you tune in, investors.com/IBD Live for all the details. We'll see you there, and we'll also see you right back here tomorrow at the close.